In this short video, we will show you how you can easily create a benchmark LISA report of your illustration. Depending on the results of the analysis, it can validate your client's probability of success expectations and help you test different scenarios by adjusting premium, loan, duration of premium and loans, or crediting factors. First, make sure your sales illustration is close by. You will need to give LISA just a few data points from it. LISA uses these to calibrate a benchmark of the illustration prior to processing 1,000 potential realities, generating a report in seconds. You get immediate results using the illustration's premiums, loans, account values, along with policy charges from industry average benchmarks. Go to lifeinsuranceanalytics.com and register if you haven't already done so. Click on the blue button to get started. From your dashboard page, click on the green button to create a Benchmark LISA report. If you haven't read the overview before, pause this video and read this tab first. It has important information. Then proceed to the description tab. We've highlighted what you need to enter. Most of these inputs are self-explanatory. The first 3 fields are for reference and to help you organize your reports. Then choose from one of the 4 policy types. LISA is designed to analyze either sales or in-force illustrations of IUL or VUL, and either accumulation or protection designs. The next row is important for timing. By selecting year 1, we are telling LISA we have a new illustration. The third row is for gender, class, and age, and tells LISA what industry charges tables to use. Important tip. Based on how most carriers define age in the numerical part of illustrations, you will need to make the age 46 the age of the client at the end of the current year, not age 45 as they are today in our example. Next, we need the crediting information. In this example, we are analyzing an IUL with a current constant illustrated rate of 5.54%, S&P 500 annual point-to-point index, current cap rate of 8.5%, a 0.25% floor, and a participation rate of 100%, and no asset charge or fixed bonus. A side note, when working with uncapped strategies, you will make the cap equal to 100%. Note that LISA percentages are entered as decimal values. The next screen requires current values for our starting point. Enter the initial base death benefit. There is no term blend in this example, so supplemental is 0. Illustrations display end-of-year values. Be sure to enter the end-of-year gross accumulation cash value, not the cash surrender value. Then enter the end-of-current-year net death benefit from the current columns on the illustration's numerical page. Enter the illustrated annualized premium and the number of years to pay. In the next row, enter the annual loan from the current column on the illustration's numerical page and the starting and ending years for loans. Finally, look for the H100 net cash value and net death benefit from the current columns on the illustration's numerical page. We are testing the H100 in this case, which is common, but LISA benchmarks can accommodate testing sustainability to any age from 95 to 100. As a best practice, LISA wants you to upload the illustration for your own record keeping. After the file is uploaded, click Close. Then click the Check Inputs button. Go back to review your inputs and toggle when you're satisfied with your inputs. That's all we need. Entry complete. You can click the green Run button. 1,000 volatility trials happen in a flash and reveal the probability of sustaining to H100. We see the key results displayed, such as life expectancy, age of first lapse, age where half the lapses occur, and the lapse probability. We can then tab through the analytics and study the information for this benchmark. After assessing the initial benchmark results, we are ready to run our first scenario. What we do next depends on the product design and client objectives. Assuming the client is comfortable with an 80% probability of success, we want to test a lower annual loan amount until we achieve a 20% or lower failure rate. We can also change the maximum failure rate desired. Other possibilities that can be tested include changing or varying the premium amount, the duration of premiums or loans, and crediting parameters. Run as many scenarios as is needed to help in redesigning the sales illustration and to help provide better context for how the sales illustration can be understood by the client. Pro tip, you can even change the simulation runs field to 1 to see a single random possible future one trial at a time, and see on the screen the results after each scenario run. This is a powerful exercise for producer training and client education. After each change, click the blue Run Scenario button to see the results on the screen and assess the impact of the change by reviewing graphs and key metrics. Run more scenarios if necessary. When we are satisfied with the modifications, we can summarize them in a report. Click the blue Report PDF. If you wish, you can choose to include a summary of the scenario in the report. And there you have it, a powerful document that can help you close more sales with confidence.